Yes, this morning we have a global panel of experts in the digital asset fund management space, and they will give insights into the current landscape for digital asset funds and what's ahead in 2022. Can I pass it over to our panel to give a brief introduction of themselves? Let's start with you, Joy.
Thanks very much, Sue. So I'm Joy Lam. I'm a partner at Sidley Austin based in Hong Kong. I sit in the funds team, so I'm doing a lot of work with clients who are setting up funds that invest in virtual assets and helping them with structuring funds and also dealing with regulatory and licensing considerations.
Thanks. And Lucy?
Yep, my name is Lucy Gazmararian. I am the founder of Token Bay Capital, which is an early stage digital assets and blockchain venture fund based right here in Hong Kong. So we invest in startups right across the broad spectrum of the digital assets landscape, from DeFi, NFTs, financial services. So a very exciting time. Before founding Token Bay Capital, I was part of PwC's crypto team, also based in Hong Kong. So very much hands-on with all the crypto businesses and startups across Asia and actually globally, helping them from a consulting perspective and also to sort of navigate regulatory landscape. So yeah, great to be on this panel today.
Great. Mark, thank you.
Hey, I'm Mark Yusko. I'm the founder of Morgan Creek Digital here in Chapel Hill, North Carolina in the States. We are an early stage venture capital fund focused on digital assets as well. A little bit of a hybrid approach in that about 2/3 of the capital, about 70% of the capital, is in equity around businesses building out the infrastructure, blockchain and other crypto related businesses. And then about 1/3 of the fund is in liquid protocols themselves. And we're raising our third fund today.
Right. And finally, Dan.
Thanks. Yeah, so I first met Mark when I was at Tiger Management in the 90s and then founded Pantera in 2003. And in 2013, we launched the first cryptocurrency fund in the United States and also the first blockchain venture fund. We have 4 different products now that cover the whole span of blockchain assets and are managing $5 billion.
And just on that note, Sue, Dan gave me a shot on the ground floor, just like It's a Wonderful Life in 2013, and I was too foolish to take him up on it. But now I've caught up. Well, I haven't caught up, but now I'm catching up.
Great. Okay, so why don't we kick off the panel? I think maybe Mark, I'll throw it out to you first on, let's talk about like who's investing and who's not investing in the digital asset space.
Yeah, so I think the good news, bad news. So the bad news is still probably 90+% of the people out there, institutions and individuals, are not investing. But that number is not 95 or 98% like it was a few years ago when we started. We formed Morgan Creek Digital in 2018, and formed Morgan Creek Capital back in the early 2000s. And what was amazing is 3.5 years ago when we launched our Fund 1, 90+% of the people we called wouldn't even call us back. Of those 10 that we would meet out of every 100, 9 out of 10 would say no. So we ended up with about 30 clients, 6 institutions, most of them individuals. Fast forward to today, still about 70% say don't darken our door again. But that's a 3-fold increase, which is great. Unfortunately, still about 9 out of 10 say no, but it's just a lot of pick and shovel work. So we've seen, we had the first public pension fund to come in, side by side, 2 sister pensions. Got a educational institution, a couple foundations, healthcare organization, insurance company, but still mostly families. I think part of that, so there's the old line that an investment committee should be an odd number and 3 is too many. So it's just tougher for groups to make this big decision, and individuals can make it a little bit faster.
Right. Okay. And Dan, you've a similar experience. You've seen greater adoption in the last year.
Yeah, I think Mark said it really well. In the early days that he and I were evangelizing for this new asset class, you'd get a lot of rejection, and then a lot of really, kind of basic or even very negative questions. What about the Silk Road guy or whatever? And now it's the opposite way. You're getting a lot of inbound phone calls from very big institutions that want to learn about the space. And many of them already have a blockchain team and a pretty serious effort. So, the kind of the quality of the dialogue has changed. And then to Mark's point, I think, we're still in the very early days of a multi-decade transformation, and 5% or maybe 10% of institutions have a real exposure to the space. And if we're right and it's a real asset class, 20 years from now, it's going to be, much higher allocation.
Okay. And Lucy, your fund is relatively new. How have you found starting up a new fund?
Yeah, I mean, so my LPs are high net worth family offices, but in discussion, even as an emerging fund manager with corporates across the region, as well as some institutions. My background, even though I'm an emerging fund manager, I actually used to manage traditional money. And I think the inflection point that we're at now, which is sort of the institutional CFI and TradFi meeting DeFi and digital assets, that kind of background lends itself pretty well to raising capital right at this moment. I think there's a comfort with managers that sort of bridge the old world and the new world. So I'm finding, and that's exactly the trend that I saw from PwC, because I was many years in traditional finance. I was with Goldman in London for 6 years in fixed income, then Credit Suisse in Singapore. And when I made the transition into crypto with PwC with a consulting hat on, I was looking for that moment where the two worlds really come together. And my goodness me, it's happened far faster, I think, than any of us anticipated. And I think now what's driving investors to this space is there's an appreciation that crypto doesn't equal Bitcoin. And that actually this is a far broader movement that's, revolutionizing every aspect of our lives, not just financial lives, but our social lives, media, entertainment, gaming, and sport. And so that's really captured widespread imagination. And I think there's never been a better time to be raising a fund.
Fabulous. Okay, so what's on the agenda for Q4 and on the roadmap for 2022?
My roadmap?
Yeah, anybody's roadmap.
My roadmap, I'm currently fundraising and deploying capital. So I'm doing what VC should be doing, and the roadmap is really to continue on this high growth path and supporting outstanding entrepreneurs, exciting businesses. My remit is actually in Asia Pac, so I'm focused on Hong Kong, but Singapore and across the region. So that's where I distinguish myself probably versus Mark and Dan with potentially, I won't speak for them, but more of a US focus. And so, yeah, the roadmap for me is more of what I'm doing.
Okay. And Mark?
Yeah, I think a couple things. I mean, one, while we're based in the US, what I really love about this business is it's global, right? I mean, there are really, really dynamic, smart entrepreneurs all over the globe that are doing really amazing things, and proven business models spread like wildfire around the world. And we saw this with tech first. We've been investing in tech infrastructure, as Dan mentioned, we're coming up on 30 years. And it's hard to say that out loud sometimes, but I think that's actually part of the reason we've experienced a little bit of success and aspire to the success Dan's had. And that, look, we're not kids wearing black t-shirts. The three of us here representing the fund world. And that's nothing against those kids wearing black t-shirts. It's just that there are hundreds of $5, $10, $20 million funds, and I'll put the funds in air quotes, but they can't really earn the trust of these institutions. So for us, it's doing more of the same, getting out and evangelizing, as Dan said, but the global nature of the business, both from the perspective of potential investors, as well as the deals. I mean, our last deal that we did was over in France. We're looking at multiple deals in Asia as we speak, although that has gotten a little more interesting in that I think there's a little fire sale going on. But I would say the roadmap for 2022 is to try to continue the education process. I think that's the most important thing. There's still a lot of people that need help in cross-selling. Part of the reason I'm going to San Francisco on Wednesday is to go to a big public pension fund, their annual meeting, and talk to their board and try to help explain to them why they need to get off zero. That's my big hashtag, because I believe that 3 years from now we're going to look back and it will be deemed fiduciarily irresponsible to have zero exposure to digital assets, which is good news for all of us.
Okay.
So, I'd love to amplify a point that Lucy made is what's changing is it's not just Bitcoin. And obviously, when we launched our fund, there was only one manager in the space. We only had one fund and it only had one asset. That's not super investable for allocators. But now there's, a lot of great fund managers in the space. You can invest in both equities and tokens. And then really importantly, there are way more tokens than just Bitcoin. And Bitcoin's been amazing. I think it's still going to go up 10x or, huge returns are to be made. But it's $1 trillion now. It's going to be hard to go up, orders of magnitude from there. Whereas, some of the other blockchains, and in particular, some of the applications built on top of other blockchains, they're kind of like the small caps or the micro caps of our industry, whereas, Bitcoin's the mega cap. So I think that what's going to happen going forward is the majority of the gains will come from tokens outside Bitcoin. And again, that's not a negative on Bitcoin. Bitcoin's going to do great. And the analog I used at the SALT conference last week was to say it's like in the late 90s saying the majority of tech gains were going to come from companies other than Microsoft. And Microsoft did great. It was a $2 billion company in the late 90s. It went up 10x. I mean, it was an amazing investment. But 80% of the gains in the tech space were from Microsoft or from Apple, Google, Facebook. And a couple of those companies didn't even exist in 1998. So I think that's what we'll see in our space. Well, Bitcoin's going to be amazing. It's going to go up a ton more. The majority of the gains are going to come from other tokens. And we've been saying this for a while, and it's actually pretty wild that in the last 6 months, more than 100% of the gains have come from things other than Bitcoin. Bitcoin's down, and there's been 700 billion of value created in other protocols. So again, investors should have a basket approach, should try and get a wide exposure to all the different, very disruptive technologies that are being built now.
Excellent. So what's it going to take to get more institutional funds involved in crypto and investing in digital assets?
Time.
I can talk to this one. So I think actually regulation is a really important component when it comes to institutions. They're bound by regulation, particularly financial institutions. They're the most heavily regulated sector. And so that's actually why I set myself up as a regulated venture fund manager, which is fairly unusual at this point in the cycle. So as I was licensed to manage traditional money, and now I've got my Type 9 license back in Hong Kong. And so I'm applying that sort of traditional regulated framework to this new burgeoning asset class. And I think that's actually what institutions like to see, because they don't need to trust in me or even trust in a track record. They can trust in the institutional grade framework that I've built around my business. And so I do think that's an important component to bring that level of investor on board, but open to other views from other panelists.
No, I agree, but I agree with it, but I just think it really is time. And Joy is a great example, right? I would venture to hazard a guess that 5 years ago, she was not thinking about this as a career path, and this is a specialty from the law perspective. And a lot of custodians weren't thinking about building out crypto-related businesses, and a lot of other service providers weren't going down this path. But the talent migration is like nothing I've ever seen. I've got white hair. I've been around a long time. I've only seen one time close, and that was in the mid-90s with the migration into the internet, and that was extraordinary, and the wealth creation opportunities were extraordinary. But this is bigger. I mean, it's far bigger. The number of very talented people crossing the chasm from the traditional world into the world of digital assets and crypto-related assets is mind-numbing. And every single day you see more and more examples. And therefore, these institutions in particular can't avoid it, right? They can't stay on the sidelines forever. And it's making it worse in the sense that the ones that did come across early, the ones that were smart enough to back Dan's early funds, have had just such extraordinary outcomes that the FOMO is really starting to kick in, and that's why the inbound interest is there. Never before, again, it's only been 3.5 years, which seems like dog years, I guess, in this business, but never did we get a call 3.5 years ago from $100 billion pool of capital. Hey, come talk with our board, or hey, come present. I spoke to 43 members of a big pension board and advisory committee. 43 people on a Zoom. I mean, it was amazing. So, education and time.
Yeah, I would say that I would echo Lucy's statement that our industry would be benefited by more regulation. There are some investors that are cautious just because not everything has been spelled out. A lot has, but there's still some things left. And the point I would make would be kind of the negative space around that 6-8 years ago, there were a lot of reasons to not invest in blockchain. There's no custodian that you could, it was regulated, it was big, or you could trust. There's all kinds of issues on whether this technology would work. A whole list of reasons people wouldn't want to invest. And we've kind of checked them all off. All those things are done. And so regulatory risk is kind of the last thing left. In most countries, it's being sorted out. So risk and reward go together, and there's a lot of historical upside in this space. So I think the risk is very low relative to the upside, but it is kind of the last remaining risk.
Well, one other flip point on that I think is really important is it's a sign of how mature the industry is, how real the opportunity is, right? So it's the old Nelson Mandela quote, first they ignore you. So from 2009 to 2015, this was a science project, bunch of kids running drugs on Silk Road. Totally, you can ignore it and be no worse off. Then they laugh at you, kind of 2015 till this year. It's like, ha, 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 look at those crazy crypto people. No, just laugh it off. Then they fight you. And regulation is what every incumbent throughout the course of history has used to slow down disruption. Every incumbent uses regulation to try to slow down the disruptors. It never works. Name one. I defy anyone to name one technology that once it reached critical mass went back in the bottle. Just doesn't happen. They try, but ultimately, the incumbents get disrupted. So this fight that has begun is real, but it's actually a good thing because, the last stage is then you win. So, the winning is coming.
And if I may, just to follow on your point, Mark, I mean, this is why we're seeing such an explosion in the gaming and NFT space, because that's less regulated, actually, in many instances, not regulated at all. So we're actually seeing where this technology can take us and the imagination of all the participants and how we can reorganize ourselves in different creative ways. And that's really why gaming, NFTs, the metaverse, blended with blockchain is such an exciting space right now because it's able to progress at a faster rate.
Well, I couldn't agree more, Sue. I'll take it just one tweak on that just a little bit, which is I think NFTs actually create regulation for everything because everything will be tokenized. Property rights will all be digital. Every asset, every stock, every bond, every currency, every commodity, every piece of art, every collectible, every box or every case of fine wine, every private business, everything, all $700 trillion of global assets is going to be tokenized. We'll trade 24/7 fractionally on blockchains. That's happening, and that's what the NFT. NFTs are not just little JPEGs. NFTs are property rights, and it makes value bidirectional. That is a mind-blowing concept if you actually stop and think about it. And Chris Dixon did the great thread on it, not me, where he talked about, look, in 1994, there was one website. Tim Berners-Lee wrote one website. Today, there are 1.7 billion, and that's why the internet works. In the future, there will be orders of magnitude more tokens, and that's what the trust net will run on. And the internet of value, or the trust net, as I call it, is so much bigger and so much more of an opportunity than the internet itself. and it's just getting started. That's why we're all here.
Joy, let's hear your thoughts on regulation and even kind of expanding into the China ban and the impact of that.
Look, so I think, from a Hong Kong perspective, I mean, what we've really seen in the last, 2 to 3 years is the regulator really step in and try to build this framework that is more kind of tailored to some of the issues that we see around digital assets. And, since the latest announcement from the Chinese government on the ban, we definitely have fielded a lot of queries from people asking, what is the impact and what does this mean for Hong Kong in particular? And I think our response really is, it doesn't come as a surprise to the market. And I think, the latest announcement that we've heard from the Chinese government is, I guess, the most detailed and the most expensive yet. It definitely has more specificity than what was contained in previous announcements, and it's probably a little bit more serious in its tone. But, I think the key message really is that it's nothing new. It's just the latest reiteration of the same message that they've been pushing for quite a few years now. So, in that sense, it's not really a shock. And, I think we did see a little bit more reaction from the market in terms of, some exchanges saying that they won't be servicing clients that are based in China. But, the flip side is that it's providing more clarity. And I think that is helpful. It's helpful for the market to have a clearer sense of where they're drawing the line in the sand, what activities will be permitted onshore and what activities are not going to be permitted, and how does that really work in terms of offshore providers trying to operate on a cross-border basis to service investors in China. So for us here in Hong Kong and other parts of Asia, in terms of fund management in particular, I do get asked quite a bit, is this expected to have a negative impact? And I think the answer is no. I mean, for us here in Hong Kong, as I said, we've got a very, very clear framework that the regulator's been working on for quite a few years, where we do have properly licensed participants who are, operating exchanges, working on distribution, managing funds, they invest in virtual assets. And, we've already got quite a few licensed corporations who are properly regulated and are operating within the confines of that regulation to, give investors in the market in general confidence. So I think the other thing is that what we had seen prior to the announcement was already people who, have been managing investments in virtual assets and looking to move from China into Hong Kong or Singapore or other jurisdictions that are more accommodating and more friendly. And I think that, the latest announcement is probably just going to accelerate that trend. So, I think obviously not great for people who are in China, who are kind of trying to be active in that ecosystem, but it gives a lot of opportunity, I think, for operators in other jurisdictions in the region, because, there will now be this flood, I think, towards people just looking to relocate, to move to a more hospitable jurisdiction, as we saw with the miners a few months ago.
Thanks. There is a question, actually. How does the evolution of regulatory clarity fuel fundraising in the Asian markets?
Look, I think, regulatory, as some of the other panelists have already commented on, look, regulatory uncertainty definitely has been something that has, if not stopped, then at least made people pause about, entering into this kind of new part of the market. And I think what we're really seeing is, with this increasing regulatory clarity and with the comfort that people get from knowing that service providers and fund managers are properly regulated, properly supervised by a legitimate regulator, not kind of a Mickey Mouse regulator, it does give people a lot of comfort. And so, we are continuing to see a lot more people entering into this segment. And I think the other thing is, if you'd asked me even 12 months ago, what kind of activity are we seeing? I would have told you, well, we're seeing a lot of people who want to set up pretty vanilla strategies or tracker funds, but actually, like, since then, it's really, because people are getting more comfortable with it, it's really expanding. So I think that we're seeing an evolution in terms of the investment strategies that people are now executing with their funds. So, DeFi and NFTs and the other topics that have been covered today, we are seeing fund activity, which is focused on those segments as well. So I think, that regulatory framework and the certainty and the comfort that comes with that is giving people more confidence to kind of go out and start executing more sophisticated strategies, as well as just, pushing investors into this space and giving them the comfort that they need to really just, get into the segment in general.
Yeah. Okay. And Mark and Dan, on your side of the globe, how is regulation impacting your business?
Oh, go ahead, Mark, if you want.
I was deferring to you. I would say we haven't seen much impact. As I said, the interest level is 3 or 4 times what it was a few years ago. Still a fur piece, a long way from where I think it will be over time. And we're one of the kind of the second tier groups. The first tier groups like Dan's and A16Z and Paradigm, I think their phones are ringing off the hook nonstop. Now, are there some who might have been on the fence who may have slowed down their process? For sure. And we did see a few people kind of vanish into the ether who we had good first calls with. But, our pace of interactions hasn't changed at all over the past 3 or 4 months. It's been very consistent. And that's, said up sharply from a year ago. And that's COVID recovery. Part of it is, we're back in the market fundraising, but also part of it is just people are, what they say, there's nothing worse for the psyche than watching your friend get rich.
Yeah.
I'm not sure the regulators would like that one.
Dan, what's your views on regulation?
Yeah, I'll agree with Mark that, especially in most of the rest of the world, ex-China, the regulations have been pretty consistent and fairly laissez-faire. They're not aggressively helping blockchain and they're not really hurting it. And in the United States, most of the bodies have already ruled, the IRS and the CFTC and all those. And all the rulings have been absolutely the best possible. And it really is just the Securities and Exchange Commission that still needs to rule on a couple of things. So if that were completed, that would probably help our industry. But, it's proceeding at a pace, which is, kind of to be expected. I don't think everything's going to change overnight. And then to Joy's point that I think there has been a big shift out of China into other places for Bitcoin mining in particular. And we put a regression on our Twitter feed and our website that shows that after their announcement, which is the 3rd time China's banned Bitcoin in my career, this one actually really hit. And they took out about 25% of global mining capacity. And at the time, we guesstimated that it would take about 3 months for that mining capacity to come back online somewhere else, Hong Kong, Singapore, or North America or somewhere else. And it actually has been doing that very much in line with the forecast. So there is something really big happening with mining in China. It's being phased out, and it's going to countries that have probably, or at least provably, a better mix of energy. The problem with China is you just don't know. It might all be hydro in the old days anyway, so it might have been really clean energy. So I think that's actually a positive development for our industry.
Yeah.
Okay, we've only got about 5 minutes left of the panel, so why don't we talk about what success looks like for each of you in 2022? Lucy, do you want to start?
Yeah, I think I covered this earlier. For me, success is I'm in the business of venture capital investing, so that's very much supporting very high potential companies and entrepreneurs, and making sure they're connected with the right strategic partners, and really helping these businesses to grow. As I said earlier, my background lends itself, I think, to this point in the cycle where the old world meets the new world, and creating that dialogue. We're at a point where communication is extremely important. So my role as a sort of thought leader and educator in this space needs to continue. And for me, that also equals success. So I would say it's a combination of investing in great startups, obviously raising capital, but also continuing to contribute to the build out of the ecosystem as a thought leader, as a communicator, and really, help evangelize, because this technology, the potential is really fantastic, and the benefits to society are extraordinary.
Great. And Mark, 2022.
Sure. Yeah. So I think success takes on a couple different forms. I think one, we've got a pretty aggressive fundraising goal for our third fund. We started small. 2 years ago, 3 years ago, we were a $40 million fund, followed by a $100 million fund, and I think we'll be 3 times that in the current fund. We've done a lot of co-investing as well, and so one measure of success is kind of finishing off that fundraising in the beginning of next year. Second is we've been very blessed. I mean, we been fortunate to partner with some just incredible entrepreneurs and had some great success for our investors early. You always want to do better than your last fund. So, but that puts a high bar up there, and it just means to continue to, as Lucy said, partner with the best entrepreneurs. And that's the good news is there are lots and lots of them out there, and getting better all the time. And then I think the last measure of success, back to one of Dan's points, is when we did our fund one, like I said, 70% equity, 30% tokens. Most of those tokens were Bitcoin and Ethereum. We thought, Bitcoin was like a Series B, Ethereum was like a Series A. We had a couple little tiny things like Solana and the Graph that were kind of pre-seed. They actually did the best of all of them, but they were little teeny tiny investments. In Fund 2, we were really focused on Bitcoin. We kind of missed DeFi. That was bad on us. And now in Fund 3, I think we'll have less in Bitcoin, more in DeFi, and now play to earn and metaverse. And so to me, success in 2022 is how we embrace the early stage startup community in these edge areas like play to earn, metaverse, et cetera. So just really exciting opportunities with just, again, some extraordinary talent. So partnering with that talent would be a measure of success.
Okay. We could obviously chat all day here, but I see Jesse's come on just to tell us that we're running over time.
Yes. Okay, thanks, Sue, and very exciting views from our panelists. Thank you all again.